The rally during Thanksgiving week was the biggest since 2012. And at the same time, small cap stocks joined the party. Multiple Fed officials have now confirmed that a key interest rate cut is coming on December 10th. So it looks like a Santa Claus rally is officially underway. Let's break it down. Welcome back to Navellier Market Buzz. So, Dad, what does this small cap resurgence signal for investors?
Well, it signals we've had an early January effect, which is small cap stocks are hypersensitive volume, and they benefited from the surge just before Thanksgiving. And that means the real January effect in January will be spectacular. So this is the first phase of a rally that will explode the upside when the new year comes.
But how can the market flip so fast?
Well, probably because the short sellers went home and they probably had apologized to their mothers for being horrible human beings and negative people, because that's what they are. They're evil people. People are happy during the holidays. Volume gets light, and the market tends to just gravitate to the natural flow, which is a lot of money pouring in the U.S. markets right now. We're it. You look around the world, we're the only country that's really growing. And we have one stock, namely Nvidia, that's worth more than the British stock exchange, the French stock exchange, the German stock exchange, the Italian stock exchange. And, it's Christine Lagarde gave a little talk to the bankers in Europe today, and she basically said we're not poised for growth anymore in Europe because they're not embracing all the AI and stuff that's driving American growth.
Speaking of Nvidia, Meta may consider buying Google's AI chip, so Nvidia might finally be facing a real AI chip competition.
Yeah, I should clarify this. This is not Google's Willow chip, which is associated with quantum computing. This is another chip, and the order hasn't been placed. It's not in Google's forecasted sales and earnings. So NVIDIA's forecast sales and earnings are much stronger than Google. And it was just another rumor to hit NVIDIA. And NVIDIA does regenerative AI, which is machine learning. They look at everything. That's why it takes so much power and from the data centers and all. There are lower grade AI chips. Like we've had Paul DeLugas on Navellier Market Buzz, and his firm is Natural Intelligence in Boise, Idaho. And they look at correlated bits of data. And their AI is based on, how humans think. Okay. So there are going to be a lot of lower grade AI applications. Okay. And I have no idea if that's what Google's doing and Meta's considering. But right now, NVIDIA still dominates. And to my knowledge, Google doesn't have a lot of orders for this yet because it's not showing up in the analyst estimates.
Bespoke also highlighted weakening labor trends and softening retail sales. Is that why the Fed is preparing to cut rates?
It's largely due to labor. And also, we had a very, very poor consumer confidence report from the Conference Board. They're very credible. I don't like the University of Michigan survey. So it just added up. Everybody needs to cut now. And it's as simple as that. And Mary Daly from the San Francisco Fed was the last one to join the party. So we're definitely going to get a cut. But we got big Fed people speaking out for it. John Williams, the New York Fed guy. We got Christopher Waller, of course, and Stephen Moran wants to cut. So yeah, it's mounting, and I don't think they can stop it. So it's going to be fascinating. The next question, are we going to get another cut in January? This is going to be very, very interesting.
And the New York Times and Wall Street Journal all say that Kevin Hassett is emerging as President Trump's pick for the next Fed chair. What would that mean?
Well, that's going to be fascinating because Kevin Hassett, who's the head of the Council of Economic Advisors, is the happiest person on earth. He's just internally happy. He can only smile, okay? He can only be upbeat. So it would be really, really interesting if we had an upbeat Fed chairman, okay? Because normally the Fed says something and then they have to do something called double speak and hedge everything they just said. So I think it would be great. He's going to be a cheerleader for the American economy, which is kind of his job now, as is the Commerce Secretary Howard Lutnick. But I think it would be fascinating to have Kevin, because I don't think will ever again have such a happy Fed chairman. So if he's the pick, I'm all for it. And it's going to be an interesting experiment. But, we are going to be hitting 5% GDP growth next year. There's going to be a lot of reasons to be happy. And the Fed's job is to keep that incredible growth going without inflation. So right now, it looks like our economic growth isn't causing what we call demand push inflation. That's where we all fight for things and drive prices higher. We are importing deflation from China. There are other economies around the world that are soft, so they're discounting their goods so we can buy them. I think Hassert is just going to be a very, very interesting Fed chairman. He's I think it's going to be a welcome relief.
Now let's dive into some companies that are reporting this week. Let's start out with cybersecurity. CrowdStrike has been a standout performer this year, but what should investors expect for their upcoming results?
Well, CrowdStrike sales are supposed to be up 20.3. Their earnings are only supposed to be up 1.2. The analysts have not revised their estimates. So they have an excellent earnings surprise history. I think CrowdStrike still has the overhang of the Microsoft Azure crash that happened in Europe and shut down the airlines for a while. They had a quick fix to it, but the crash happened on a Friday, and I guess no one's there to upload this upgrade. But I think that you really need a cyber attack or something to get CrowdStrike going. But they are the biggest company out there putting up the firewalls and everything to protect our data.
Next up is Marvell, which has been riding the data center and connectivity boom. What are you looking for in their earnings?
They're going to be good. Sales are going to be up 36.2%. Earnings are forecast to be up 71.6%. The analyst revisions have been positive to the upside. The only issue is Marvell missed last quarter. So they better provide some upbeat guidance with these spectacular sales and earnings. And, it's you just can't miss. Hopefully they'll do that, and it'll be up and away for them.
Turning to discount retail, Dollar Tree has been facing some real headwinds. Could this quarter offer any other surprises?
Yeah. Their sales, of course, are forecasted to decline 38%. That's not good. Earnings are forecasted to drop 3.8. There have been some recent analyst cuts, but they had a huge 87.7% earnings surprise in the previous quarter. So maybe they can do shock and awe again. But yeah, this stock's off my radar because I like positive sales and earnings growth. But when you have a surprise that big, hopefully they can do it again and provide some decent guidance.
Staying in the discount space, Dollar General has been the steadier operator. How do their prospects look heading into earnings?
Pretty darn good. Their sales are supposed to be up 4.1%. Earnings are supposed to be up 3.8. The analyst earnings revisions have been positive, and they have a very good, consistent, strong record for surprises. So I'm expecting them to have another good report.
Now on to one of the big enterprise software names, Salesforce. What should we expect for their report?
Well, their sales are supposed to be up 8.8%. Their earnings are supposed to be up 18.7%. The analyst community has been pretty steady with their estimates, but they have to deliver an upbeat guidance. Salesforce is enterprise software. It used to be, mostly managing your client lists and for all the sales reps and all, but they've expanded into all kinds of other areas, kind of like a Workday. So let's see if they can give us some good guidance, and then I think the stock will pick up.
Switching over to packaged foods, Hormel has been struggling lately. Is there any sign of a turnaround this quarter?
I don't see it. Their sales are supposed to be up 3.4, so that's an improvement. But earnings are supposed to drop 25.7. There have been significant analyst cuts. This company has a very poor earnings surprise history, so their guidance will be critical. And let's face it, spam is not the healthiest thing for us. And they're going to have to find a new product to be their image, maybe something a little healthier that sells better.
Now, for groceries, Kroger is always a closely watched bellwether. What are you anticipating for them this time?
Well, their sales are supposed to be up 1.8. Earnings are supposed to be up 5.4. They've been some minor analyst trims, but their earnings surprise history is awesome, and this is a very well-run company. Hopefully they can provide some decent guidance.
Let's talk retail apparel. Lululemon has been dealing with slow momentum, but what are you expecting from their results?
Well, their sales are supposed to be up 3.3. Earnings are supposed to drop 23. There have been significant analyst cuts, but Lululemon has an incredibly good earnings surprise history, and it's a retail bellwether. A lot of people don't realize Lulu's sales to men uh, have been driving their growth. They've pretty much got the gals cornered. In fact, the gals are buying for the men at their stores. So, I think they're a good bellwether for this holiday shopping season. So I have hope for them, but it obviously doesn't have the earnings growth I need. I would not be surprised if they give us good guidance.
And finally, beauty retailer Ulta has a strong surprise history. Do you think they can keep up that streak?
I hope so. Their sales are supposed to be up 6.8%. Earnings are supposed to decline 11.3. Analyst revisions have been positive. But this stock has an excellent earnings surprise history. Elf Beauty, isn't as good as it once was. Okay, I mean it's an innovative company. I don't own it anymore, but it's a very innovative company, and it was competing with Ulta and Sephora. So we'll see, But the analysts like them. They
Mhm.
revised estimates higher, so maybe they'll surprise. But again, anything that has negative forecasted earnings, I'm not going to be in. But I have hope for all these companies. The market should be broadening out here, and it just can't put all its money in AI. But that's that's where the growth is right now.
Now, I want to switch over to some subscriber questions. One of our subscribers said, how should we calculate our personal compute stock percentage? Which companies count and which should be excluded?
Well, if you subscribe to the Platinum service, which is a premium service we offer, we have an asset allocator there where you can key in your risk tolerance, whether you're conservative, mildly aggressive, and it'll tell you exactly how to allocate how many shares you need based on the amount of money in your account. So I would refer you to that. But yeah, I like you to have at least 60% of your money normally in conservative stocks, about 30% in moderately aggressive stocks, and only 10% in the most volatile stocks. The thing that's so confusing for investors is what's safe today often becomes more volatile down the road. What makes a stock safe is money flowing into it. So as the flow of funds get more erratic, okay, for whatever reason, it's the analysts discovered it years ago and just not as much money going in, or there's short sellers trying to ruin the party and the flow of funds gets more sporadic, the stock gets more volatile. So what makes a stock safe is money flow, okay? And risk isn't the angle of ascent, it's the dispersion. So we calculate that. We also calculate something called residual variance, which is basically risk we can't diversify away. And as you go down the capitalization ladder, residual variance grows. Larger stocks are inherently safer than smaller ones, but I wouldn't discourage you from buying smaller stocks because they have better valuations. But yeah, try our asset allocator in the Platinum Club. I think you'll find that's a phenomenal tool.
Another one of our subscribers wanted to know, what do you think oil will do following the Ukraine Russia refinery strikes?
Well, it's already meandering lower. It's below $60 a barrel. And what the Trump administration did is they got India to buy oil from Guyana. Guyana's the big find off of Venezuela. Guyana's his own country, of course. And that field keeps getting more and more productive. And Exxon is now shipping some of that oil to India so they can buy less Russian oil. And so Russia may want to hurry up and do the peace deal because, their infrastructure has been really hurt, as has Ukraine's infrastructure. So, it gets to a point where no one wins in a war, okay? And hopefully we will get a peace agreement. They're pushing pretty hard for it. Europe's not too happy because I guess we didn't involve them in the negotiations. But, President Trump really doesn't like to see all those people dying. And so we'll see. But the one thing that they haven't done is they haven't bombed the pipelines from the Russian Arctic because it would be an environmental disaster. Those pipelines would freeze up. The spill would be hard to contain. And you have to fix those things when it's warmer. It's hard to do it when it's cold. So the other thing is, when you have oil coming from the Arctic, if the oil stops flowing, it will freeze. So yeah, it has to keep going. It's the kind of the latent effect of things moving don't freeze. So I've always found it interesting. They've been very reserved, not hitting those pipelines, and but they've been hitting refineries and terminals and all kinds of stuff. mess up Moscow and stuff, and also the supply lines to the Russian troops. So uh, I think most of the damage has been done. Obviously, there's bigger sanctions on the shadow tankers that Russia was using to ship oil around. So it'll be interesting. But yeah, oil is going to be below $60 a barrel until the spring arrives, and then worldwide demand might pick up a bit as the weather warms.
Another one of our subscribers wanted you to talk about SMCI and what should they be focusing on in regarding upcoming guidance.
Well, the company provided incredible guidance for the current quarter. Okay. And they have a ridiculous order backlog. And they said that some of their customers wanted the upgraded chips. And, so we'll see if they can just how much it increases. SMCI's guidance has been sloppy, to be candid with you. But, I'm still up over 700% in the stock, and I don't want to pay the capital gains. And I know they have that huge order backlog. So I'm sticking with it, but it is a volatile stock. It wasn't the best performer in November, but it's pretty rock bottom now. And but that's what they got to do. They got to deliver on guidance. We did have Dell, give an upbeat report. They're finally starting to capture more market share from the data center business. The data center boom is now enveloping more and more companies.
And lastly, any quick thoughts on Bloom Energy?
Yeah, Bloom Energy is very simple. They make hydrogen fuel cells for the data centers. The tech industry wants clean energy. So that's geothermal in Reno, where we have a home. That's hydroelectric, Columbia River Gorge, Boise, Idaho, Sioux Falls, South Dakota, Chattanooga. So they want green energy. Obviously, Microsoft's talked Constellation into restarting 3 Mile Island because they view that as zero carbon energy. So, and then there's a bunch of data centers going in Georgia. Georgia added a new nuclear plant next to the other plant. I think they have 5 now. They went from 4 to 5. But every data center has these diesel generators outside, a lot of them, big ones, because if the power goes out, they got to keep running the data centers. They can't have a break. So Bloom Energy fuel cells are greener than running a diesel generator. And Bloom Energy is mostly with Brookfield, which is a Canadian company, but they're big landlords for pretty much everything. And they're huge landlords in the data center business, and Oracle. Oracle will be the second biggest cloud provider once they're done with their expansion. So Bloom Energy is volatile. It did make a transition from negative to positive earnings. It's pricey, but it is the green backup energy for all the data centers.
So my dad is actually going to be speaking on a Forbes cruise next week. So we're going to do a special episode talking about what to look for the rest of the year and heading into January. Please let us know if there's any specific questions that you want us to address in the comments below. Do you want to talk about the cruise a little bit?
Yeah, I speak on Forbes cruises every few years, and our friends at the Money Show help coordinate all this, and it's always an honor to be there. Steve Forbes was very kind to me, endorsed my first book, and I appreciate that very, very much. But yeah, I'll be on with Mark Mills and some other good speakers. It's always an honor to be invited. You were on one, remember? We did the one in the Baltic Sea, right after COVID. So we kind of had the cruise ship to ourselves. If you do want to go on one of these cruises, I would strongly encourage it. They usually have a great line of speakers.
Yep, great. Well, thank you so much. Thank you to you all for watching. We hope you had a wonderful Thanksgiving. Make sure to subscribe and like if you haven't already. We will see you all next week for a special video. Thanks so much, everyone.